Hello, Mark Lloyd, Lieberman Home Loans. Today we're discussing how to avoid mortgage closing missteps. Before you close on your mortgage, it's critical to avoid taking steps with your finances that could derail the closing process. Making major changes to your credit or job situation can delay the closing on your house because lenders track any changes that are made by consumers after they apply for a mortgage and before it closes. This also applies to consumers refinancing their mortgages as well. Here are some tips for hassle-free closing on your mortgage. Mistakes to avoid before closing on a home. Before you have closed your mortgage and signed the mortgage at the title company, avoid making large purchases such as buying a car, furniture, or appliances. Depending on your credit score and history, these transactions can lower your credit score and impact the rate or the amount of the mortgage you could receive. This could result in a higher interest rate for the next 15 or 30 years, or even having to come up with a larger down payment. Overall, you want to keep your financial household in order and stable while you are going through a mortgage application and closing process. Anything that creates uncertainty for the lender will weigh on their underwriting decision, and anything that looks out of order will raise questions. Now, can I change jobs during the mortgage process? Another major misstep is changing jobs. Mortgage lenders examine your employment history to determine if there is a history of steady jobs and income. Providing additional documentation on employment to a lender can delay the closing on the mortgage. When the lender needs to verify your employment, it is easiest if they can call an employer that can confirm that you have been employed there for a while. Getting that confirmation from a brand new employer or even a prospective employer complicates the situation and can raise additional questions, which then takes more time in the underwriting and verification process. A potential homeowner who quits their current job could potentially kill the mortgage, especially if the new job is less money or a completely different line of work. Avoid applying for a credit card or a personal loan because it could impact your credit score. This could be a problem for applicant if they had a bad credit score or is just good enough to get approved for the mortgage. Taking a hit to a credit score can tip the balance negatively. Also, ensure that all bills are paid on time and there are no new collections sent to credit, regardless if it's medical or a bill. A collection is still a collection, which could drop your credit score by 20 points or more immediately once it hits the credit. How to prepare to buy a home. Several months before you start shopping for a house, it's a good idea to review your credit reports for mistakes. Errors can occur if you've moved, a company incorrectly reported a payment as late, or mixed the information of another person with your own, for example. You can dispute any mistakes, but it can take several weeks for the credit bureau agencies to update your report. Make sure your credit score is the best it can be by tracking it for a while before you decide to buy a home, and to make sure no negative issues like missed payments or taking on additional debts arise. The three credit bureaus, Experian, Equifax, and TransUnion, must provide a free copy of your report once a year. You can obtain it at www.annualcreditreport.com. It's always better to resolve any credit bureau issues before applying for a mortgage and not have to contest findings while you're in the mortgage process. Determine how much you can spend on a house, which will help you narrow down the search. Your next step is figuring how much down payment will be and if you have enough money saved for the amount. Ideally, you have the money all set aside in a savings account to have it ready when you get to buying a home. If your parents or another family member is going to give you money for the down payment, make sure they do so at least 3 months before you start applying for mortgages. Lenders want to see a history or that it has been in your savings account for at least 90 days. Start researching real estate agents to find the best fit and know your rights as a consumer. Remember, buyers usually don't pay for the real estate commission and should make sure they are fairly represented by one. Once you're closer to choosing a home to buy, you need to get pre-qualified. Being pre-qualified is a formal process, and it means that you're likely to be approved for a mortgage if you were to apply. This lets you know what you can afford and lets the realtor know that you are serious and that you are able to place an offer on a home that you like. Don't lose out your dream home because you were not pre-qualified and the person that was beat you to it. What happens the week before closing? Usually a week before closing, your lender will start preparing the closing disclosure. This document will go out to the buyers 3 days before they can close at the title company. Even if you are buying a brand new house, you should do another walkthrough of the house to make sure it is still in good condition or that any changes or repairs that you asked for were made. The buyer's lender will communicate with the real estate agent so they can coordinate a closing time for all parties involved. Does a mortgage closing disclosure mean you're approved? A closing disclosure means you are approved for a mortgage. You'll also find out the exact amount of the closing costs so you can bring it to closing. Plan on bringing a cashier's check and a legal form of identification. Once you go to the title company to execute all required documents in the presence of a notary public and the seller has executed their portion of the documents as well, the escrow officer will forward all closing documents to the buyer's lender. Once the buyer's lender verifies everything was executed and initialized correctly, they will authorize the title company to finalize transaction and disperse funds once they have the wire transfer from the lender. Then congratulations, you are now a new homeowner. For more information, reach out to me at www.talkwithmarkloyd.com, 207-478-2065. And you can apply at the website www.markaloyd.com. Thank you.